Of Caterpillar are up 3% today, on pace for its biggest gains since January. The move comes after the industrial giant beat earnings per share expectations for the sixth straight quarter, posting a 15% year-over-year boost in sales. Still, the brand reported a 7% decline in construction equipment sales and a 10% decrease in mining equipment from the prior year. Let's dive in further here with Stephen Volkman, machinery and industrials analyst at Jefferies. So, Stephen, how did they do it if those two key parts of their business, construction and mining, were down?
Right. Hi, Tyler. So we knew those would be down, so I guess that's part of the equation here. But really what worked well was more the energy and transportation business. As you guys probably know, they have a power gen business. I heard you talking in the previous segment about some of the sort of old economy power gen, and that is indeed what's helping Caterpillar. A lot of this is for data centers, but other types of power gen as well. Those were probably the offsets. And then, of course, they did a really good job with margin. So this was kind of better performance of controlling what they could control, even though the end markets are choppy.
So internal cost control is really what you're talking about there, right? The cost of manufacturing. They were able to bring that down. So what does the future look like for this industrial giant?
Yeah, so I think the future is fairly bright here. I mean, at the end of the day, we're going through a bit of a soft patch here across industrials, but really Caterpillar is telling us, and everybody else is kind of agreeing through earnings season, that nothing is falling off a cliff, nothing is getting meaningfully worse, that we're sort of managing our way through this. But, you know, as we come out, as we get some Fed rate cuts, as we get the sort of mega project revenues kicking in as we get into 25 and beyond, I think you'll see more activity in mining. I think you'll see more activity in energy. Those are both important markets for CAT. And I think the infrastructure will support the construction side. So I think things are going to look fairly good once we get out of this soft patch.
It's reassuring, Stephen, because we've, for years looked at this as a bellwether of the global economy, China in particular. What are we learning?
Yeah, so there's nothing really here at the margin that's much different. So China is fairly weak for them. By the way, that's become a pretty small piece of the pie for CAT in recent years, certainly well less than 5% of sales, even though we used to sort of think of it as a China play, right? But anyway, nothing, again, at the margin, nothing's really changing dramatically. So it's not telling us a lot about the economy, but I think the most important thing it's telling us is that we are not in sort of this big downtrend, that we're not sort of approaching a cliff event, a big recession in the industrial space. And I think some investors may worry about that, but that is sort of CAT's telling us that's not the case.
How much is CAT picking up from the infrastructure spending that the Biden administration was able to get through Congress?
That's helping at the margin, but it really early days, Tyler, because it takes a long time for these projects to really get funded and for the funds to start flowing. They have to be designed. There's environmental improvements. You have to hire people. So this is going to be a multi-year kind of process. It's starting now, tip of the spear kind of thing, but I don't think, well, let me say it the other way. I think you will see a lot more as we get into 25 and 26.